Whether you're a new investor or just curious about how dividend income works, reading a dividend statement can seem a little intimidating at first. But don't worry, by the end of this video, you'll know exactly how to understand one and what the key numbers mean. So a dividend statement is like a receipt from the brokerage showing the dividends you've earned from stocks you've held throughout the year. It details how much you were paid, when, and from which company you were paid. In this example, that would be each of the series would be a different company. Series B, Series C, Series D, etc. Let's break down the important sections you'll see. So up first would be the record date. The record date tells you when you had to own the stock to qualify for the dividend. Second is the payment date. So this is when the money actually hits your account. Now, all the way over here, back to the Series B, Series C, those would be which companies actually paid the dividend. Now, for another example, Microsoft company that pays a dividend will appear as MSFT, just the letters as the ticker symbol. Second most important will be the amount of shares owned. With dividends, your payment depends on how many shares you held on the record date. So, you basically multiply the amount of shares times the amount per share that was declared by the company to pay the dividend. Pretty simple math, pretty easy to track. An easy example of this is just say you have 20 shares of, let's say, Company B. Company B pays a dividend of $1 per share, and you now have 20 shares. 20 times $1 per share, it's an easy $20 dividend payment. Now, the total dividends paid is usually listed pretty clearly on the statement, and this is going to be the exact amount of dividends that were deposited or reinvested into your account. Some pro tips for dividend investors, just to get the most out of your dividend investments. One is to reinvest your dividends using DRIP, also known as the Dividend Reinvestment Plan, as well as tracking your dividend yield. It shows up as ROI, as in return on investment per share. Also, save your statements. Your brokerage will either send them to you monthly or at the end of the year will send you a big packet of statements. Those are your tax purpose statements. So definitely save onto those, especially if you're going to be a dividend investor, you need to keep track of your 1099 div form, DIV. That is the form that you're going to use to pay taxes on the dividends that you have earned throughout the year. And that's it. Now you know how to confidently read your dividend statements and put your money to work. If this has helped you, give us a thumbs up, subscribe for more investing breakdowns, and drop any questions you may have had in the comments.